Amid all the recession talk, 2023 was supposed to have been the year of the safety play, but both healthcare and staples are among the worst performing sectors in the market. And the center of the food store stocks got hit particularly hard. Shares of Smucker, Hormel, Campbell's Soup all down more than 20% as product demand dwindled, and thanks in part to a lack of pricing power as companies tried to offset inflation. But my next guest was getting constructive on some of these names when he joined us here last month. Back for more is Peter Galbo, who's a food and beverage analyst at BofA. Peter, it's good to see you again. And we were talking about kind of incrementally going from more negative to maybe seeing some glimmers. Are those glimmers growing stronger?
Yeah, thanks, Kelly, and Happy New Year upcoming to you guys. Look, I think what we're starting to see in some of the data is a continuation of what we spoke about last month. And so moving from maybe that negative position to slightly more positive, although we're not out of the woods yet. Some encouraging signs, certainly, that we saw in some of the data around Thanksgiving. We're still waiting on the Christmas data to come out, which will be here in another week or so. And really what we're seeing out of the consumer, I think, at this point is a little bit of improvement, probably still not there yet, and that they're delaying that purchase, particularly around holidays, really right up until the week before the holiday events are occurring.
So kind of not wanting to plan too much ahead, waiting to the last minute, that kind of thing. But it's interesting what you said about the consumer maybe looking incrementally more positive. Why do you think that is?
Look, I think that as the price increases, and we've talked about, 30% pricing that's gone in for a lot of these packaged food companies over the past 3 years, as that's starting to sunset or anniversary in full, you're getting a little bit more promotional cadence around, again, some of those big holiday activities. I think as you turn the page to 2024, you're going to see a lot more merchandising activities. And so whether that's end cap displays, better deals, more merchandising efforts on behalf of the food companies, you could start to see, these volumes that are off of a very low base start to maybe get back to flat and even potentially positive.
What are we talking about in terms of some price pressures that you're seeing in the stocks that you cover? And when do you think we're going to hit a bottom there?
I think from a price contribution standpoint, we're basically there. The last round of price increases that a lot of these companies took were in the October timeframe of 2022. So again, you've largely lapped a lot of that, maybe a little bit here and there on certain products, but we're getting close to a point where that, that contribution from price is really going to go to zero. And again, as you lap some of these headwinds, think about things like, the increased SNAP benefits that were in place at this time last year. As you start to lap those, they even potentially become tailwinds into the spring of 2024. That's when you could really start to see, I think, a more material pickup in the volume side.
Would you stick with the names you mentioned last time, Kraft, I think MKC? Would you stick with those names?
Yeah, I think that McCormick is particularly interesting. It's lagged quite a bit more than Kraft. Kraft we still tend to like heading into next year. I think another interesting one that kind of sticks out, and we're neutral rated, but has been a big debate stock amongst our investors, has been Kellanova. This is a company that's lagged but has decent brands, and again goes back to that theme I spoke about of more merchandising activity that we'd expect kind of into the first quarter of 24.